After a weak beginning, the S&P 500 index stabilized toward the ends of last week and kicked off this week with a nice 1.5% gain. And all of this is happening while the VIX rose to 25 and falling bond prices are pushing yields higher. Do we need to talk about soccer and the World Cup? Nah, can do without that. Back to normal again. Hello Sector Watchers, welcome to the show. This is the 156th episode of Sector Spotlight for Tuesday the 13th of December, and I'm recording it on Monday the 12th after the close of the US markets. My name is Julius Kempenaer and I am presenting to you from Amsterdam in the Netherlands. After looking at seasonality and the monthly charts in the last two episodes, I'm going to concentrate on the current state of affairs in sector rotation. More than enough interesting rotations to cover. But the one that is really interesting is for the consumer discretionary sector, and especially what's going on inside that sector at individual stock level. Ladies and gentlemen, this is Sector Spotlight. Sector rotation. Let's have a look at the current state of affairs in that space. Let's kick off with the two RRGs, the weekly one on the left and the daily one on the right. And instead of going from time frame to time frame, so start with the weekly then to the daily or vice versa, I want to do it side by side. And the way I like to do that is by sorting both charts, both tables below the charts in alphabetical order, so that I can actually have them on the same line. So I tick on symbol, and that sorts this table in alphabetical order, and I do the same here for the daily RRG. And now I can select the same line on both graphs and see how the tails are behaving. And we're going to go over the tails first, and then we'll have a look at the individual charts if they are interesting enough to check out. So let's start with the materials sector. And I think that is immediately one of the most interesting sectors at the moment in terms of sector rotation. If you look at the weekly tail, then you can see that it is at the highest RS momentum level and it's moving into the leading quadrants, doing that for a couple of weeks already. If you look on the daily tail, you can see that the tail of XLB is in yellow in the weakening quadrant. This means that it's coming out of leading and it's rotating through weakening. It has it's not anymore picking up on downside momentum. It's stable, it's moving to the left, but it's still, well, it's almost one of the highest RS ratio readings on the daily chart, which means that there is plenty of opportunity for XLB to actually rotate back up and get back in sync with the strong rotation on the weekly. So materials is definitely one of the better sectors in the S&P 500 at the moment. If we go to communication services, XLC, then obviously this is the sector that we've been talking about for months, that it is one of the weakest sectors in the universe, and it actually still is. If you look at the weekly tail, you can see that it is super low. It's the lowest reading on the RS ratio scale. It's picking up a little bit, but only a little bit, and it's still moving further to the left on the RS ratio scale. And if you look at the daily, then you can see that we went through some sort of an improvement for the last weeks, maybe a couple of months already. And now that we're inside leading, we immediately started to roll over downward, and that positive rotation that we just saw playing out through history, that's causing that little hiccup here on that weekly tail. So communication services remains a sector to be very, very careful with, in my opinion. Here is energy. And energy is actually starting to lose relative momentum quite rapidly now here on that weekly tail. And the daily tail is not very supportive either. It's still moving to the left. It's got one of the longer tails on the daily RRG, which means that there is still quite a bit of power behind this move. So despite the fact that it's got the highest reading in terms of RS ratio on the weekly scale, that means that it is still in a relative uptrend. But I don't think that you need to be in a hurry to add or get new positions in this sector, because the daily rotation is actually still pushing further into lagging. It doesn't have a lot of, it's not adding negative momentum anymore, but it is still at the lowest RS momentum level in the universe on the daily time frame. If we go to financials, it's inside leading, as you can see, but over the last 5 weeks we have been losing relative momentum, and that is confirmed by the tail moving into the lagging quadrant. A little bit similar to energy, still one of the stronger sectors in terms of relative strength, but no need to be in a hurry to build up or add to positions because of the short-term rotation. For both energy and financials, once these tails inside the lagging quadrant start to curl up and preferably move into improving, while the weekly tails are still in positive territory, that's the time that you start to get really, really interested and start, putting together your shopping list, so to say. Industrials, that is also one of the more interesting sectors. Look at that weekly tail. It's just like materials, moving nicely into that leading quadrant at a strong RRG heading. And if you look on the daily tail for XLY, you can see that this also went through a period of loss of momentum through the weakening quadrant, but it's now starting to curl back up and it's starting to rotate back up towards that leading quadrant. So that makes industrials definitely one of the more interesting sectors at the moment inside the S&P 500. We go to technology. There is an interesting move going on. We're still in lagging, but it's an almost vertical move in terms of relative momentum. So that's a good start. We're not picking up relative strength yet, but the fact that we're quite rapidly picking up relative momentum is a good thing, especially when you combine that with the rotations on the daily tail, where XLK just came out of leading, briefly into weakening, and is now rapidly moving back up towards the leading quadrant again. That daily strength is what you want to watch. If that daily strength continues and you get some confirmation on your price chart, then it's very likely that we're going to pull this weekly tail into improving and potentially further into leading. So after a very weak period, it looks as if technology is starting to improve under the hood, at least a little bit. It starts getting my attention again. Consumer staples, also one of the stronger sectors. Nice, strong RRG heading, moving into the leading quadrant, and confirmed by a daily tail that's inside leading. It is losing relative momentum, but they're both in the green, so that is a good start. It's very well possible that we're going through a little bit of a hiccup, but this daily loss of momentum, loss of relative momentum, is not yet strong enough to turn that weekly tail around. So as long as that situation remains as it is, consumer staples is still a good buying opportunity, is a good hold in your portfolio as a sector. We go to real estate. That is inside lagging, but it's very low on the RS ratio scale. It is confirmed by a strong rotation on the daily, so that is a good thing. XLY real estate is picking up both on the weekly and the daily tails. If you're very adventurous, you could say that this is the very early stage of a turnaround. I would like to see a little bit more confirmation, especially because the weekly tail is still at a very low RS ratio reading, so this improvement here could very well cause a further improvement here, but then rotate back down again, because we need a lot of strength to pull this one all the way into leading. But for the near term, there's definitely relative strength under the hood for the real estate sector. And if we look at utilities, then there is some improvement on the weekly tail here, especially the last week. This is a pretty long segment, a pretty high RRG velocity, we call that, week-to-week movements. And you can see that there is a little loss of relative momentum on the daily, but that is a very short tail with very short day-to-day moves and still inside leading. So it's going to be interesting to watch and see whether this will turn around back up and continue to pull that weekly utilities tail upward again. For the time being, I leave it aside because the fact that it was so weak and moved rapidly into the lagging quadrant on the weekly RRG was I don't know, kind of disturbing in terms of this defensive sector in the current state of market. So I'm keeping an eye on it, but I don't think it's a sector that you really want to be overexposed in right now. So here is healthcare. And if you look at that, then again, both tails, daily and weekly, in the green is a good start. You can't say anything about that. But the weekly is losing relative momentum and the daily is starting to lose relative momentum. So again, if you have any healthcare in your portfolio, there's nothing against it. Both tails are in the green, both tails are in the leading quadrant, so that is a good start from a relative strength perspective. Will it work? Will the position work in the coming week, maybe coming weeks? Not sure, because they're losing relative momentum. But nevertheless, on the right-hand side of the graph, that's a good thing. So it belongs to the better sectors in the S&P 500 at the moment. And then the last sector here is consumer discretionary. And that's the sector that very likely holds the key to the future development for the S&P 500. If you look at this tail here, that is a super weak rotation, super strong into lagging. It's a long tail, one of the longer ones on the plot, moving straight into the lagging quadrant, negative RRG heading. And if you look at the daily tail here, you can see that it moved into improving, but it's already starting to roll over, moving back down towards the lagging quadrant. So if you just look at these two tails, there is basically nothing right with the consumer discretionary sector. We'll have a look in a minute because I think there is something interesting going on under the hood here. But on XLY, from an XLY perspective, this sector looks as if it's going down further into the lagging quadrant, and it will very soon be followed by the daily tail of XLY moving down towards the lagging quadrant as well. Let's move on to some of the individual sector charts. Here is materials. If we highlight the tail of materials again, as I said, moving nicely into the leading quadrant. And we look at the price chart and we can see that it is still struggling with some overhead resistance. It's slightly upsloping, but over the last 1, 2, 3, 4, 5 weeks already, XLB has not been able to significantly break above that 82.5, 83 area. And this week here, 28 November, we had a high of almost 84. But then we dropped back and we're now gently moving up again. In order for this relative strength to continue upward, I think we do need a significant break above, let's say 84. Let's say that we need to take out this week's high here. Nevertheless, XLB remains a strong sector, both from a relative point of view and a price point of view, but it would really help if we can take out 84 to the upside to continue this strength as it currently stands. Communication services, being one of the weaker sectors, does have an interesting price chart, because as you can see here, more than a year, XLC is moving in a very regular series of lower highs and lower lows. And it looks as if we are kind of trying to break out of that rhythm. The last few weeks, the lows have been around the same level, around 48.5. And let me blow this chart up a little bit. And then you can see that we try to push out of that channel above that falling resistance line. And this is only Monday, but it's off to a good start. So keep an eye on this, especially around 52.5. If XLC can take out 52.5, that would really be an improvement, a strong improvement for the first time in about 16 months. And that could become a very nice buying opportunity, because this is what you really want to look for, right? At the end of a long downtrend, a nice bottom formation being in the making, relative strength turning around, that's where you want to get in for a long ride up. So please, despite the fact that XLC is weak on the relative on the RRG, on the relative rotation graph, both from the weekly and the daily perspective, it looks as if it's starting to improve a little bit. So don't ignore this sector completely anymore. Financials. We talked about it. It's still a strong sector, but this one needs to take out that overhead resistance around 36. It's both overhead resistance in the price chart, and you can see that it is also, or not 36, but the relative strength line is pushing against overhead resistance, which has been tested numerous times over the last 4 years. So really, if we can take out overhead resistance around 36, and you got to look at the chart and decide for yourself when it's a break or not. I mean, we've had this little hiccup above that resistance line at one Friday close, and then immediately we move lower. So depending on how aggressive you want to be, that I would have a hard time calling that a significant break. Nevertheless, in a way it's good, because now we have a high, and if we can put in a new higher low here and then break higher, that would actually signal the start of a new uptrend on this weekly chart, and potentially completing a nice double bottom formation. That would definitely pull that relative strength line above that falling resistance line out of that sort of trading range. And that would really be, the best of both worlds coming together, making financials a really strong sector. But again, we do need to take out that overhead resistance in terms of price. Industrials is a little bit further ahead on the curve. You can see the strength of that tail on the RRG here. Here you can also see that we've cleared that falling resistance, and we're now kind of playing around with that overhead resistance around 100, 100.5. Depends a little bit on how aggressive you want to be. I would say it's around the 100, because that's where this low here is, and this is where the close of that week is. So that's around 100. If we can take out 102.5, that's definitely confirmed, and we can push higher towards taking out all-time highs. Combine that with strength in the in relative strength, strong relative strength, and the break that is well underway here, that makes XLI a very interesting sector in coming weeks. And then technology. We talked about technology, about how it is moving vertically on the RRG. And that's what you see here. You can see that momentum is picking up. Relative strength, that red line, is moving kind of sideways. That's why we're stable here on the RS ratio scale. And it looks as if relative strength, raw relative strength, is trying to push back above that former support level that's now expected to act as resistance. And if you look at the price chart, then we still have that overhead resistance line coming down. But the last 1, 2, 3, 4, 5 weeks, we haven't gone below 129, 129. And there is a little peak here around 137, which kind of coincides with that falling resistance line. So when XLK, technology sector, can take out 137, take out the previous high, take out that falling resistance line, and push relative strength above that former support, now resistance, that makes a very good case to re-enter the technology sector. And by that stage, it's very likely that the tail of XLK on the RRG will have turned into improving and start moving at a strong RRG heading. So then we have healthcare. As I said, two greens, daily and weekly, both in the green, losing relative momentum. That's what you see here. That green line, that RS momentum line, is moving lower. We're coming near the all-time highs in terms of relative strength. That's going to put some overhead pressure. But more importantly, the XLV is nearing all-time high levels. There is definitely overhead supply in this area. So what we need for healthcare to really push higher and move back higher on the RS ratio scale and deeper into the leading quadrant is when the first level would be around 140. If we can take out 140, that would be a good sign. And the confirmation is when we take that outlier high around 142.25. So as soon as you see XLV trading above 142.25, 142.50, especially on a Friday close, then there is a lot of new upsides potential available for the healthcare sector. Now, consumer discretionary, as I said, interesting sector, really, really weak here, moving into the lagging quadrant. And that's completely confirmed when you look at the price chart here. Look at that. This is serious downtrend. This is serious downside pressure with a lot of support around 130, but the market not being able to really move away from that support level. Look at the relative strength. It's broken to new lows. Both RRG lines steeply moving lower. That's what's pushing that tail here further into the lagging quadrant. So by the looks of it, by the looks of XLY, the price chart, the RRG, the relative strength line, this is a very dangerous sector. Nevertheless, I'm going to show you something that I think is super interesting. You should know what's happening in consumer discretionary. And I'm going to give you a picture and you just make up your mind for yourself. Consumer discretionary. We talked about XLY. Here's the tail again. There's no doubt about it. That is a negative heading. That is a negative sector from a relative point of view. However, when we look at the equal weight version, most of the sector rotations, most of the tails on the cap weighted, which are on the left, and the equal weighted on the right, are more or less taking the same path, taking the same type of rotation. The only one that is not doing that is consumer discretionary. It's RCD in the equal weight version. If you look at those two rotations, these are completely different. This is actually not too bad. This is really bad. So what's going on here? And in order to get a look at that, I brought up the RRG for the components, for the members of the consumer discretionary sector. And here you see all the stocks in the consumer discretionary sector compared to XLY. Look at that. It is predominant. It's the dominant direction is northeast. It's positive. There's a strong heading. There are two stocks, well, three, maybe in here as well, but CMG, but most notably Amazon and Tesla. Together, these two stocks are over 30% of the weight of XLY. You can look that up on the website of State Street. They got the fact sheets of all the spider sector funds, and you can see that Amazon is 18% and Tesla is 15% of XLY. And that's dragging the index down. And if you look at the price charts of those two stocks, so here's Amazon. I don't think we have to discuss much about this. That's a very weak chart. We broke very major support and we're on the way to the next major support level. Look at that relative strength. That broke a 5-year support level. That's a serious move. Even if it stops declining, I don't think it will move back above 100 anytime soon. It will have a very hard time moving back above 100. If you look at Tesla, I've already shown you this chart a while ago. This looks like a massive head and shoulders pattern. We broke the neckline. There's nowhere we're going to go back up. And we're now underway to 166. That is the previous low. If we break below 166 this week, that's another negative signal. Look at the relative strength here, coming out of that range. That's another negative signal. Those two charts are dragging the entire sector down, and it's weighing on the development of the S&P 500. So this sector actually offers great opportunities for some spread trading and some pair trading possibilities. There are a ton of very good and very strong stocks inside the consumer discretionary sector, and you can actually play also with buying the ETF XLY and maybe hedging out the exposure to Amazon and Tesla through some sort of an options construction. And I'm planning to write that out in a blog article later this week, focusing on what's going on inside that consumer discretionary sector and how we as investors can actually benefit from that. And that wraps up the show for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern on StockCharts television. Of course, you can also catch the replays on YouTube and any of the other on-demand channels. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.